All right, folks, good evening. It's the 22nd of March, 2026. The time is just after 8 p.m. UTC. How is everybody? Can you just give me a quick confirmation that you can hear my voice and that you can see my screen? And we'll kick off today's session. It's going to be a good one. As many of you are aware, I've got a regular guest coming on today's stream. That's ZFX Trading. Be very keen to get his takes on the macro landscape and his view of the markets and what he's looking to do next over the next 30 to 40 minutes on today's session. All right, excellent. Now, as always, a special thank you to Prime XBT for sponsoring this stream. I've been partnered with Prime for the best part of 4 years, and it's been a great working relationship. And I do have a mentorship which I've been running. Unfortunately, due to health reasons, I wasn't able to contribute much towards the mentorship from January to March. Now, it is a free mentorship in partnership with Prime XBT. So if anybody is interested in joining, I've left a link in the description of today's live stream, and that's going to commence from April through to the end of June. So it's going to be 3 months long. Like I said, it's not a paid group or a paid service. There are some preconditions that you have to meet, but it's essentially in partnership with Prime XBT. So if anybody wants to learn about trading, I'll be doing 2 market reviews a week and covering order flow, market profile, the DOM, the ladder, and even talking about trade setups that I will be looking to take both from a swing perspective and also from a intraday perspective. But without further ado, let me just give a warm welcome to Miad. Miad, are you there? And can we get a quick audio check from your side, please?
Good evening, everybody.
Good evening, Miad. It's good to have you back on again. I think the last time we both streamed together was towards the end of January. And it's certainly been a fascinating market with a big turn of geopolitical events and certainly elevated risk factors across all markets, really. And I think it's just going to be an interesting stream today in terms of getting your view of the market. And we'll talk about various markets from commodities to FX through to Bitcoin, and just overall getting your take on where are we in terms of risk. Are we in a risk-off environment, and what is it going to take to get into a risk-on environment? Ultimately, I think, given where we are, my personal stance is that I've been fairly defensive, in terms of my own trading. Just to give the audience an insight, in Q4 2025, I traded over 120 trades, whereas in Q1 2026, I've only taken 10 trades this year. I've really slowed down my trading because I recognize, the market that I predominantly trade is Bitcoin and the odd altcoin, and sometimes occasionally indices. But I recognize that, sometimes for me in the market, until there's an uptick in volatility, am I willing to interact? Because part of being a good trader is not just about having a strategy, but it's about knowing when to trade according to your statistics and how well you perform in varying environments. And I've been evidently clear that when it comes to Bitcoin, this price action that we've seen from around the 60, 65 to 72K range has been fairly compressed in terms of volatility, and it really shouldn't come as a surprise with the compression of that volatility. But as geopolitical events fold, as we see with the closure of the Strait of Hormuz, what does that mean for risk on a broader scale? And Miad, I'll let you take that away. What do you have in store for us today? Where would you like to kick off the stream?
So, as you put in the rock, seeing as well, and how things are evolving and how quickly things have evolved the way they've done as well. You probably know better than anybody else. I work really based on inflection points and then try to run my process from there, where I take bigger trades, take positions and scale them. So with a lot of things recently happening, those inflection points are coming to a point where you want to engage much more aggressively. Particularly one thing I look at when there's stress in the market like it is now is SPY over TLT, so that's S&P 500 over the US bonds. When you see this chart collapse or go down the way, particularly if you see a break in structure with lower highs that get taken out, That means the majority of the investment community prefers bonds over stocks. That's a rotation. That's an inflection. So I look at these things and I think, how far can this run? And also, what is the thing that will make anyone change their mind? So the issue right now is we don't know how bad inflation will wreak havoc on technicals, on tech firms, finance, and all these other companies. A lot of manufacturers that are reliant on cheap commodities to run their organization, and this is now falling apart. So that's the thing I look at. And I think, how far can this run? Where's the pressure point?
It's an interesting point, Mate. It's the SPY over TLT chart is certainly something that I look at as well, and I think, you know, from my perspective, when I look at indices, SPX and Nasdaq, for me the October highs were kind of the pivot point, and the markets have on several occasions tried, you know, attempted to trade higher above the October's high, but it's been rejected for the last 5-6 months. And I think when you go in a sideways range for several months after what has been a very aggressive uptrend since March, April 2025, it does, you know, make you wonder, is the market starting to top out? But top out from a sense where I'm not talking about a multi-year correction, but a significant correction where, you know, we could get a substantial move lower down over the coming months, especially with the strains and pressure of the geopolitical landscape. And not only that, I think even when you look at some of the tech sectors in America with Netflix and other companies laying off staff, you know, what does that actually mean for the labor market? I think, is it a case where geopolitical factors have an impact on markets, or is it where a further spike on unemployment rate actually rocks the markets? And I feel as though we're in very dangerous territory where it's not just about the geopolitical factors, but also the unemployment factor, which, you know, could have a knock-on effect on global markets. And then I think we've seen how, over the recent weeks, how yields and gilts in the UK and yields in the US have rallied higher back to their 2022 highs, I suspect. So what do you kind of make of the broader picture overall, you know, from not just from a geopolitical factor, but also from an unemployment factor and just general economic factors with regards to the market? I know we've got a few issues with the mic on the outside, but hopefully we can still persist ahead and see what happens.
Yeah, hopefully the mic will play ball. When it comes to markets themselves, S&P 500 and labor, the issue with labor was already there. There was like over 1 million employments miscounted last year. So it wasn't that healthy to start.
Absolutely, for sure. I think it's manageable for now, hopefully. I think.
Fair enough. And how much further is there on the downside? Most recently, it's been slicing through these valuation levels. So 22, 21, and now it's endangering 20x zone. In the extreme scenario, I can imagine 18x being seen. That's trading around 6,000 currently. And in the past, it held fairly good if I go back here. So that's the extreme scenario. Given the way that the liquidity is playing out, I can see a scenario where this year we end up in red by about 1 or 2% S&P 500 before we get a bigger rally next year.
So, Miyad, if you can just take us back to that chart again. Sorry, we had a few technical issues there. So this is basically the S&P forward earnings and valuations, and this is what is known as the Blue Angels. Could you just give a for anybody who's watching in the audience, what this actually translates to, what is the forward earnings? What are these multiples that we're looking at, just from a very foundational levels, and why you kind of track this metric yourself?
It's one model that calculates the value where S&P 500 would trade based on the expected earnings and valuations 12 months out. That means I'm expecting, for instance, X company to make this amount of profit next year, and the investor community then applies a 22 times value to that. If it drops, the valuation actually decreases.
Yeah. These are just basically estimations of company valuations. Um, Yeah, I mean, I think in all honesty, when I look at some of this data here, and I look at the way the markets are now starting to subside, that in itself is evident of a risk-off scenario. Moving forward, if you just move on to the next chart that you were going to transition into, what's the next market that you're actually tracking or keeping an eye on? I know that when you look at the dollar and we look at oil, you suspect that oil is close to somewhat of a significant high here. I mean, do you see room that if geopolitical issues persist, is there room for oil to trade higher, or do you think oil is starting to cap out round about these levels? What's your take on an oil perspective? And if oil does go high, then what does that mean for the broader market in your view?
So when it comes to oil, the way it reached the level it reached was very interesting. So I want to zoom into this a bit. This is obviously the daily chart. It was trading around 70 odd dollars, where the worry started that Iran might close the Strait of Hormuz. What my analysis was based on and the process I follow doesn't mean the process always works, but over time it works a lot more than it doesn't. My process showed me, when you look in the past, Iran had no way of physically closing the Strait of Hormuz, but it could put the fear in it, and the companies that insure these tankers, and they achieved that. About within 3 days, those insurance companies pulled all the insurances and made all those tankers essentially locked on place, and they all had to just throw the anchor out. Essentially, that was the signal that the strait will be closed even before they made any attacks or tried to do anything else. And that's when he saw this rapid move towards $108, which was my expectancy based on the calculation I had of how much oil is flowing out and how long this can be prolonged before they find alternative sources. It bled over by another, I think, $12 or so. Based on this, on when there's closure or the partial closure of the Strait of Hormuz, my expectation is that oil more or less has topped out where it has. Because there's alternative oil coming online, there's Russian oil coming. Arabs, they've got other pipelines through the Red Sea that are supplying now, I think, 3.5 million barrels a day. So overall, this oil supply market is finding alternatives. What you also find at certain price levels, a lot of refineries, a lot of companies that do business won't even able to afford to do business at those levels. So gradually, the demand for oil will come down. To me, that sort of a level is screaming, it's a blow off top.
it. Okay, so no, thank you for that. I think we've just been having too many audio issues, if I'm honest with you, on today's stream. What we'll do, look, I think what we'll do, Miad, we'll move on to Bitcoin. I think we're just having too many technical issues. And I think it's probably going to be better if we just record a session together as opposed to doing a live stream. I don't know why that is today with the audio, but let's move on to Bitcoin. If we can move on to Bitcoin now, Miad, and then...
So, quick question, did the audio issue not resolve, no?
It was just more so on my side. I think it's one of these things where it's a technical nightmare where it's just sinking in and sinking back out. But I think we're both back together. But I think in a future episode, maybe later this week, we can do a recording and publish that, and we'll kind of release that later this week, hopefully. I think what my view on oil is that I don't know I don't have any real experience of trading oil, nor can I say I'm somebody who's traded oil with great experience either. But for me, look, it's evidently clear if oil does start transitioning higher for whatever reason, then I think that's going to add further downside pressure to the broader landscape when it comes to risk. And if there is a ceasefire deal, that happens in the next 2-3 weeks, then we'll just have to wait and see what happens in terms of oil markets and whether short term that gives a relief rally to financial markets across the board from a risk on perspective. But I think, for me personally, when I was looking at the dollar back in January, I remember speaking to, a good friend of mine, Tom Capital, in the DMs, and we both agreed that we suspected that the lows of January on the dollar towards the end of January were in. And for me, that was going to be certainly a key marker in terms of believing that the low is in for Q1 on the dollar. And subsequently, you're obviously helped by some of the geopolitical factors and a flight to dollar as a safe haven. We've seen dollar rally, and we've seen Euro USD come off, or we've seen the pound against the dollar come down as well. So, what's your take on the dollar moving forward? I mean, just not only from a short term perspective, but also from a midterm. Let's just say looking out ahead into Q2. What's your take on the dollar?
We're offline now. Yeah, it's just me and you.
No, we're still live. We're still live. Yeah, we'll record another
session. The thing is, Aussie Tom you talked about, brilliant guy. Some interesting that I found with Euro USD is, and this came to me over the years, a certain level in oil will be detrimental to the European economy.
And what level is that for you? Do you think we've breached that level in oil where it's going to be detrimental to the European economy, or are we very close to that?
It's just oil needs to just hold above about, call it $75 or so, and you find that the pressure really builds, and on Europe and Euro USD will feel it very quickly. I've kind of drawn very loosely that chart for you to look at. Every time in the past you see those levels breached or we came close enough, and it's not just staying over the level for a day. It needs to stay there for a good few weeks for the pain to be felt in the European economy. It tends to then topple over. Same thing over here at different levels that really hurt the European economy quite a lot. I'm expecting the similar scenario to play out. So even though I think oil has topped, I don't think oil is going to come down quickly enough for the inflationary pain to be not felt, if that makes sense.
Yeah, it makes sense. So basically what you're saying is that you believe that we're close to the highs in oil, but oil could remain elevated at these levels. And if it is likely to come down, it probably isn't going to come down anytime soon. And with that time period where oil remains elevated, it's going to cause downward pressure on FX pairs, especially on the euro and the European economy, which kind of weakens the euro against the USD. It's interesting, and I think that's going to bring about some really good FX volatility as well. And I think what probably also adds to FX volatility is going to be the rates, right? We've seen a rally in yields, we've seen a rally in gilts, and kind of the knock-on effect that's also adding in terms of fuel to the fire with rates market. And FX markets generally have an uptick in volatility when there's rates volatility, and really wanted to get your take on what your thoughts are with regards to US yields and kind of the gilts. It all reminds me of you know, I really used to be a big macro hobbyist back in 2021, 2022, when we saw a spike in the interest rates across the US and the UK and the Eurozone. Is there anything that's really catching your attention there, which might be ringing any alarm bells for you? In fact, let me just ask you the big fully loaded question. In terms of a recession moving forward, and I'm very careful to use the R word because I was using the R word back in 2022, and you know, lo and behold, somehow, you know, we had various Janet Yellen tricks and QRA to stimulate the economy, which is fair enough. But let's ask that fully loaded question. What probability do you give for a recession to happen? But more importantly, not whether a recession will happen or not, but what will lead towards the causation of a potential recession? In fact, is it even something that's worth considering or contemplating at this stage?
I think it's very much, yeah, it's very useful to look at it. Reason for that being is that if that recession fear is, let's rephrase this, if the bond market sees the whites of the recession, we're going to see it in this chart. So this chart is the 3-month yield minus the 10-year US yield. And what I found, we are dig deep into this, whenever it reaches above zero and then collapses down again, like it does now, you're usually about a couple of quarters away from a recession. It doesn't happen all the time, but it happens way over 80 or 90% of the time, this exact dynamic. We obviously seen this last year, but then it moved back up above zero, but now it's confident they're going below zero, and it's unlikely to turn back. That is usually when the bond market is seeing the whites of the recession. You see liquidity withdrawal in indices and all the good stuff. The bigger question is here, if you're going to get a recession, is what's the Fed going to do to help out when you've got high inflation? You know what I mean?
Yeah, of course, when you've got high inflation, what does the Fed do in the tight corner? Because how does the Fed go about cutting rates if inflation is high? But then what do you do in the case where if there is an impact on the labor market where unemployment is rising but inflation remains high? What does the Fed do in that situation? It's a really...
It's a trick one. You've got the back against the wall. What are you going to do? You can't cut. You're going to make inflation worse. If you hike to kill inflation, you're going to hurt the employment quite a lot. In the past, this doesn't happen a lot, but in the past, the Fed went down the hiking route.
Yeah, it's interesting. So what's your thoughts? Do you think there is a probable case for a recession moving forward, or is it something that doesn't really make too much of a difference to your trading, and you just basically assessing the market on a week-by-week basis? And I think it's also a nice segue. Do you remember back in January, you shared a chart which was about market breadth on equities, and how every time market breadth comes towards the lower bound of the chart, it often presents a very good buying opportunity. Now, I'm not sure if this chart data does actually go all the way back to the previous major recession of 2028. What's interesting for me is how much time did it actually spend down at those levels, not only in 2001, 2002, but in 2007 or 8, and how oversold did the market remain at those levels before it was deemed to be, actually, this is a fantastic buying opportunity, or this is a really good time to position into the market? So, yeah, just take away, I think you can see that we're looking at the data here from 2008, 2009, and where you've marked out that these are the levels where you generally expect a recession-like dip. What surprised me when you shared this in January is the scale and the speed as to where we are already, in terms of how quickly this has moved down over the last several weeks compared to where we were at the start of January. So it's a question of, is a significant correction just around the corner? Because I've seen many participants talk about not only price capitulation, but time capitulation. But could it be the case that we might actually get buying opportunities far sooner than anticipated, because I see many people pointing to Q4. Q4 is going to be the ideal time to buy, and Q4 is when we could see some great buying opportunities. But the one question I'm asking is, what if markets are not only just forward looking, but what if we do get a quicker correction period that happens to be in towards the end of Q2 or maybe early parts of Q3, not necessarily Q4? I don't know the answer to that question, but I'm always asking that question to myself and trying to find signs in the market that indicate that actually this is actually a very good level now to start thinking about positioning from a macro perspective, especially as somebody who wants to buy Bitcoin over the long run. I've been in cash for quite some time now, and I was very fortunate enough to sell 125s or short 125s and exit some of my positioning over the next few weeks during October. I'm now in this position where the further price goes lower down, the more I perceive this to be value, not just Bitcoin, but equities as well. And I think it coincides with where we'll probably see a lot of fear in the market from participants, from news outlets, from those who are covering markets. But I just see that as opportunity. The lower down the market goes, if it does go lower down over the next few months, I'm just looking at that as opportunity as opposed to being euphoric at the highs. Just want to know what your takes are then in terms of this market breadth chart. How would you interpret this? And let's just say, for example, the curveball that I want to throw at you is, well, what if this does trade down into that recession dip territory? Is that something that you're going to start aggressively positioning for based off just this one chart, or are there other factors or other charts that you look at that kind of determine your positioning moving forward?
Yeah, I think I do. You and the community wouldn't be fair for me just saying yes, buy it, don't buy. Let me explain what this chart is meant to do. This chart is meant to take all the assets within the S&P 500 and calculate how many of those are trading above the 50-day moving average. So hence market breadth. It wants to see if the entire market is bullish or if it's very selective. That means there's times where this market breadth can be going down, even though the index itself is still trading fairly high. That's because the index will latch on, or the algorithm that's running it will latch on to just particular stocks and try to mimic those moves. If the entire market is down and price of the S&P 500, which I've overlaid for you in the lower painted blue, is moving down as well, we've got a bit more of a unanimous or let's say a whole market move. Everything's going. Once it reaches those levels of 15 or potentially lower, we've got a dynamic where those assets that are still generating an income, they still have value in the future, they are deflated. And that also means risk managers across the globe, in particularly bigger risk managers for institutions like Goldman Sachs and such, they will open up their wallets and they will tell their traders start buying stuff because it's cheap. And that's why this makes this market breadth so lucrative, because we know institutions look at exact those things, they see those levels, and they'll shut their eyes and buy it. And that's why it goes up. So the answer is, if it starts dipping towards 20, 15, and 10, I'd be very interested to buy. To pinpoint exact moments, I use obviously some of the technicals that we use on a daily basis and that we share to enter those trades and have a risk management. But very naturally, the scale and the size we'll involve ourselves with will be pretty much determine how deep we're going to go in this market depth. The deeper it goes, the more interested I am. I hope that carried a bit better.
Yeah, interesting. No, thank you, Miat. I think what we'll do is, just before you hop off, just to get your final takes on Bitcoin, what are you looking at in terms of Bitcoin from a high time frame perspective? And then what I will do, I'll take over in terms of my views and what I'm currently looking at as well in terms of Bitcoin.
When it comes to Bitcoin, what I always like to look at is naturally the dominance chart, see what that's doing. I think Bitcoin will will bottom out when this chart tops out. So I've got a top out zone of about, call it between 14 and 15%, which has some historical precedence, mind you. And when that happens, I think Bitcoin will find its bottom as well. It doesn't mean Bitcoin is going to bottom out at 50K or 40K, but I very much see those levels happening. If I put Bitcoin here as an overlay, you get to see actually how well that counter correlates. And for those that you love math, so the counter correlation is running on a 20-day rolling basis, about 90%, minus 90%, I should say, because it's counter correlated. Looking here at Bitcoin in the blue line, once that happens around this, I can easily expect Bitcoin to trade within the 40, 50K region before it bottoms out.
Yeah, interesting take. I haven't looked at stablecoin dominance in quite some time, actually. So, no, thank you for that. It's a good reminder to probably take a peek and start looking at some of the other indicators that I used to use back in the past to kind of get a gauge of where we are in the overall landscape of markets, and certainly Bitcoin as well. But no, thank you, Miad. Look, I appreciate you coming on stream today. I know we've had a few technical issues with the audio. What we'll probably do is I'll probably jump on a recording session with Miad over the next week or two, maybe in the first week of April, and we'll publish that as a recorded video. But once again, thank you, Miad, for joining today's session. You're more than free to hop off, and then we'll hopefully touch base very, very soon. Yeah, thank you, Ben. Thanks for joining. So just give me a second or two. I'll just quickly bring up my charts on Bitcoin. So yeah, I'll just continue from the session that Miad had, and I just want to go back to basics in terms of price action. And whilst I'm doing that, let me just quickly clear one or two things from my side. Okay, so when I look at the Bitcoin chart, when was the last time that I actually streamed? I think it was at the start of March. And from a personal perspective, when I look at the Bitcoin chart, I still do believe that, look, bigger picture for me, in all honesty, is in which direction is the overall trend flowing? And there's no denying that the 1225 weekly EMA on the Bitcoin chart is heading to the downside. And so historically, when this does happen, I know that the counter trade or the mean reversion trade is the difficult one to time, but the easier trade is to flow in the direction of the markets. Now, I'm purely talking from a trading perspective. And you can see where price once again rejected from. We had a near perfect mean reversion back towards the bands. Okay, what I was anticipating was that maybe at some point we're probably going to get a mean reversion up to this level here, around about that 79-80k level. Why? Because, well, that's February's high. Okay, that's the one level that I really wanted to see price trade into, not that I was looking to long into there from the last stream that we had. The last stream that we had was around about the Monday the 9th of March, I believe, or Sunday the 8th. And it was at that 65k level. You can see where price traded up into 74, 75. And for me, what I wanted to sell was a move up into that 79, 80k level. Why? Because not only is it confluent with February's high, it was also confluent with the fact that we covered that there's a bunch of single prints resting at this chart, which I think would have acted as significant resistance. And then when you go to the weekly profile, well, where are the weekly bands? If you look at where the weekly bands are, the 12 is at 76 now, and the 25 is up at 84. So anywhere in this zone would have been a nice rejection. The one caveat with looking at something like this is the displacement between the 12 and the 25. That is quite a fairly significant gap between 76 and 84. And so it is a bit of a level of randomness as to where the market may reject. However, when you look at the 3-day 1225, that's been capping the level really nicely all the way since we've lost the level. We've never found any significant acceptance above the 3-day 12 and 25 EMA that we trade below it. We trade push up above it. It's very short-lived. The minute we get back under the bands, you can see the continuation low down. It's happened there once, twice, and for the third time, perfectly trading into the 25 3-day weekly moving average. And so, like I've stated, if the trend is on the way down and we're not seeing any compression or base-like structure like this, where we see compression of the bands and we see a shift in structure where there's a higher high followed by a higher low, not only just a higher high followed by a higher low, but look at the period in which the consolidation happens. Even in this instance here, we got a lower low, lower high, lower low, higher high. Okay, look at the bands compression, and then it flips. That's your bullish momentum, shifting bullish momentum. So really what just like I did in the previous bear market, okay, and I remember that I was somebody who was vocally exiting the market in November 2021, that I don't want to be on the wrong side of the market. When the market's trending down, you are going to get these rallies, and those rallies are often for selling until there's a period in the market where there's enough of a base being built. Okay, this was from June 2022 all the way through to January 2023. Then we get the shift into a higher high, into a higher low, into another higher high, into a higher low. Okay, so avoiding all that significant drawdown where I'm trying to buy Bitcoin here and buy Bitcoin here, and then I suffer more drawdown. You know, for somebody who traded the Bitcoin range in 2023, this was the range that I was predominantly trading. And I had no clear read at the time whether Bitcoin's going to come lower down, because that was one of the biases that I was leaning towards. But evidently, the minute we see Bitcoin flip aggressively above 30K, that's where, you know, I always talk about in terms of being on the right side of the market. Well, it's this right-hand side where you want to start becoming bullish with confluence with the bands. Yes, you may be giving up some of this ability to buy Bitcoin early, and that's probably where a dollar cost averaging strategy is going to work. But then again, it's subjective, because if you had applied a dollar cost averaging strategy here, and many participants buying in at 30K here and here and here, talking about this being a potential bottom, well, look at what happened thereafter. We dropped another 50, 60, 70% lower down from this level here. Whereas in my case, I was happy to trade the entirety of this range, knowing that this could take much longer to resolve. But where am I buying back in from a spot perspective, having profited from a trading range perspective, is the momentum. The momentum is where I'm looking to capture most of the gains in the quickest amount of times. And so when I look at the price action of Bitcoin here, I still believe that, you know, I don't know where the bottom is going to be. I'm not going to take any guesses as to where the bottom is going to be. But the one thing in terms of being really objective is just looking at the market, and the market is telling me, as it stands, until conditions change, that there is inherent weakness. And if we look at the ES in terms of the indices, again, if you go back to the stream that I talked about at the start of March, I did talk about the fact that, look, at the end of the day, if you look at where October's high is, this is October's high. And you look at the monthly time frame, how many attempts have we had now to trade above the monthly highs of October? 1, 2, 3. 3 times we've rejected from that level and closed back under 69.50. That is a sign of weakness. And then what do we get when the bands start rolling over on the weekly perspective? Well, there's your first sign of weakness, that we now start. There's the trajectory. Okay, so keep in mind that, look at the upward trajectory of the bands. Look how momentum is dissipating here. This is just low down in momentum. This is where you want to be recognized in any market that you trade. You look at a 5-minute chart, you'll see this playing out time and time and time again. The fact that this is a weekly chart magnifies the move, or the measure of movement, lower down. But ultimately, the concepts are the same. So when you see this momentum dissipating, that's a sign of, all right, we're no longer in a trending environment. We are now transitioning into a range-bound environment. And it's the one aspect of trading that many participants fail to recognize, because whilst you're looking for trend continuation, you're failing to recognize the shift in momentum. And not only the shift in momentum, but a shift in direction of the markets. This is the weekly time frame. You can see the compression on the bands and how many times we're now trading within the bands, whereas in a clear uptrend, you know, when you get that sharp correction lower down, it's very short-lived. And again, and again. Okay, but look at this. When you start tapping into the bands and the momentum is starting to roll over, that's your shift in structure. That's why I believe that there is certainly some potential for continuation to the downside. And then when you look at the daily bands, right, when you look at the daily bands here, the fact that we've been range bound, and one of the ranges that I covered on that stream was, look, I think there's a very good probability that we're going to trade back into these lows here. But what's going to define the shift in structure is that, look, when I last streamed, we were trading, I believe, round about here, Friday the 6th or 7th. The fact that we've traded above the bands here into a lower high, into what was a shift in structure here, this move down was a local shift in structure in terms of, that's my mid-range. We reacted from the mid-range into this lower high. Failure again at that key pivotal level. Look at what's happening now. Look at the shift in trajectory. And so when equities are rolling over and we're seeing weakness in terms of the weekly time frame where we're starting to see the bands pinch, we'll have to just wait and see. But evidently, if I had to pick a direction, that I think any rallies are potentially for selling. And if we reject from the bands and the bands crossover, then what does that mean from a continued downside perspective, not only on ES, but also on NQ? And if that's the case, then what does that mean for Bitcoin? Have we ever been in an environment where equities and NASDAQ has persistently been trading towards the downside, yet Bitcoin has been rallying significantly? And so therefore, I think, based upon historical data, based upon historical structures, if equities and NASDAQ are likely to roll over the coming weeks, then I really struggle to see the case where I want to be swing long as a trader on Bitcoin, as opposed to actually, I'm just going to wait for any short squeezes to consider shorting back down to the next obvious target or the next obvious level where I think it makes sense to take profit on my trade. So it's very much a trader's market. And the reason why I'm talking about context is because you have to get the context right when it comes to trading Bitcoin. You have to look at the bigger geopolitical factor. I don't really look at macro from a perspective that I once used to in 2021, 2022, where I used to place a heavy emphasis on macro, but nowadays I couldn't make sense of macro, because good news is good news, bad news is good news is bad news, and bad news is bad news. Which one is it? When the market decides that good news is bad news or bad news is good news, which direction do you flow? So really, I only look at macro when it's at these big key inflection points in the market. Okay, when I think that, if you follow the likes of Cross-Border Cap, who talks about global liquidity and liquidity flows, and he was talking about how he or his team believe that in terms of the liquidity cycle, that they perceived that there was likely to be a top in global liquidity back in October, November. And I remember reading that article, and that kind of influenced my bias towards, like, hang on a minute, the last time this happened was in 2022, and we saw Bitcoin correct. In fact, Bitcoin didn't only just correct, we saw a deep correction on Bitcoin. But as we correct, that's opportunity. This is what you want to be, as long as you've positioned sensibly or you're waiting to buy into Bitcoin, this is what you're waiting for, these deep, deep corrections that happen every 4 or 5 years. And they're set up to be some of the best buying opportunities, that you can just buy Bitcoin, send it to a cold storage wallet, or certainly I will be, and just sit on it for the next cycle until you believe the cycle is coming to an end. And that's kind of what I'm waiting for now. I don't see any reason or purpose in being bearish. I think it's about being defensive and recognizing that there's going to be some fantastic buying opportunities somewhere down the line. At what price point, I couldn't tell you, but somewhere down the line, there will definitely be certainly an opportunity to buy Bitcoin at value or perceived value, in the view that we speculate that Bitcoin will go significantly higher over the next 4, 5, 6 years. And so the lesson I'm trying to make is that whilst everybody was euphoric and ignorant towards downside risk, and this was the one area that I talked about on the August stream, on the September stream, on the October stream, is that there's a very simple pattern that you can look at on Bitcoin to kind of identify when there's a potential risk or reversion to the other side. And that is the monthly chart. It's such a simple concept that you can backtest this, and every time you get these significant wicks at the highs over several months, it's a sign in the markets that this is exhaustive, whether it's to the highs and again, or whether it's to the lows, that all this is seller exhaustion, just as this here was seller exhaustion, because the market sold off, the market just refused to go lower down. And what do we get? You've got 2-3 months to look at this price action and to gauge that this could be an inflection point in the market. The same happened here. The same happened here as well. Look at the sharp wicks on a monthly candle. These are clear signs that price is failing to get acceptance at these levels. Look at this. It doesn't get any clearer than this. I can't say that this was all high and so you didn't tell this before, because I clearly mentioned it in the August 2025 YouTube live streams, and I mentioned it again in the September, and then again in the October, November ones, that look, according to the science, I think we're in for a deeper correction. How deep is anybody's guess? I'm not here to predict what's going to happen 3 months out. I'm only looking at the risk profile. And I explicitly said, if this is the top, I don't really care about calling the top. What I care about is positioning into a defensive stance that, in hindsight, if this happens to be the top, great. I'll take the credits for it. Oh, yeah, you know what? I sold the top. Great. But at the time, I don't know if it is the top. And it doesn't really... The thing is, you don't want to concern yourself with, or is this going to be the bottom? All you want to think about is this actually a good buying opportunity based upon the conditions that I see? Is this a good opportunity to maybe take some profit off now because I'm seeing rejection? And let's see what happens thereafter. That's all you can do. There's no point in saying... looking like an arse and said, "Oh, look, I think the top's in. I think the top's here at 68k," which we saw in 2024. We saw many commentators on the timeline talking about, "Oh, look, Bitcoin's having a shift in structure in 2024." I fully remember that during the summer of 2024, where just because we saw a shift in structure, and that shift in structure was here. Look, oh look, XO, this is making. Lower lows, lower highs and lower lows. Look, another lower high, another lower low. This is bearish structure. Well, no, it's not bearish structure, because look at the context of what you're trading. You're trading within a range. When you're trading within a range, you are going to get these shifts of structure. What is perceived to be macro bearish market structure actually isn't. On the daily or within the range bound environment, relative to the environment, yeah, you can say here's a lower low, here's a lower high. But it really doesn't mean much in the greater grand scheme of things. Whereas when you look at a trend down, okay, the fact that this was a high, this is a second high, and that was a third high, we failed to hold anything significantly above this level. Well, there's your breaking structure right there. The minute you come down through these lows here into a lower high, that's a shift in structure there, okay? And that was this was the initiation. This was a failed attempt to hold above that level. That's your inflection point. And that was a point where I really started aggressively selling the 116s. The minute we start trading through 106s, well, if you look at the 3-day bands, like I said, this is where the band system really adds confluence to really just being aware of the context. Look at that. The minute we trade through the bands, then I think the probability is to the downside, okay? And then the same is happening again. We have very similar price action to what we saw in this period here, right? If we just remove the bands from here, if you look at the price action here, that's your range lows. And you could say this was our local range highs. What did price come and do? Okay. Trade sideways, takes the highs, fills in this inefficiency here, right? Because there is a gap there between this low and this high, filled in that inefficiency, and the market went all the way back down to the range low. Fast forward to where we are today. Very similar structure. We make a capitulation low, we hold some lower highs, lower high, compressing into the highs, another lower high another higher low, higher low, low, capitulation low, higher low, another higher low, okay? Look at the rotations into another higher high, and it's that higher high where people say, oh look, Bitcoin's got a shift in structure, this is bullish now, this is bullish market structure, and look what happens. Why did that happen? Because when you're in a downtrend, okay, when you look at the bigger picture of the downtrend, look at the weekly. Was that bullish? No, it wasn't. Look at the 3-day. Is that bullish? No, it isn't. So common sense tells you that the higher time frame, the weekly and the 3-day, takes far greater precedence than the daily, because the daily would have had you believing that, oh look, this is a shift in market structure. We should be going much higher. But if you look at the higher time frame, it's telling you, hang on a minute, you've just had a classic mean reversion back into the bands. This is where you want to be cautious, because if we fail to hold this level and we start trading through it, we're probably going to come all the way back down to the other side of the range low. And that's essentially what happened. Once again, what do we get? We see Bitcoin, capitulation low, another higher low, higher high, in relevance to this local environment, higher low into another higher high. Is this bullish structure now? For me, it isn't. For me, this is a failure that we've tried to trade above this level 3 times. It's piss weak because we couldn't even get up to 80k, which is the level that I really wanted to see get traded. Very similar to this. If this is your high here, in fact, I'll mark this out. There's that key significant low, right? Why is that key significant low? Because look at that. That's where your support was. And then look at the thin inefficiency that we got when we broke down. This is cascading liquidations. We couldn't even get a retest of the underside, and that's often a sign of weakness where you get continuation. But the one time we do come up and trade that inefficiency of this gap over here, right? What did the market do? It got rejected and sold off significantly lower down. That's essentially where sellers were stepping in previously, sellers stepping again, and who pushes the market lower down? This is an unwinding of positioning. So whoever's building inventory at these levels, right, is now becoming a forced seller lower down, which is causing that significant leg lower down. And I suspect the same could happen here, where you get a buildup of inventory, buyers speculating at price. Commercial players are the ones who move the markets, whether it's higher, whether it's lower. They're the ones who are going to push the markets higher and lower, not people like you and me. And ultimately, when I look at this chart now, I think to myself, you know what? The fact that we've just had 2-3 attempts to trade above this level and we can't, and we're also below the daily bands of, below 70k, then does that now increase the probability that we could trade all the way back down to where? To February's monthly low. So at the end of the day, when I look at price action here, it's a battle of the range in between February's high and February's low. And it's at those extremes where I'm waiting to see how price reacts before I even want to contemplate trading this from a swing perspective. And that's kind of the strategy that I've been going with, throughout Q1. And that's why I've only taken 10 trades this year, as opposed to the 120 odd trades that I took in Q4. But so far, that's kind of my belief. That's the philosophy. That's the strategy that I'm looking to play. I'm just looking to keep it really simple. I'm not trying to pick a bottom. I'm just trying to really assess where there are good trading opportunities, and when the time comes to buy back into spot positioning, that's when I'll probably be fairly vocal that I think Bitcoin is at a really good discount here. It makes sense for me to pick up some Bitcoin or pick up some exposure on the way down, maybe 20%, and then I'm going to wait for the bands, because if you look at the bands have been a very good indicator of price over the years. You can look back test this as far back as 2015. Let's just go to a logarithmic chart. Every time the 1221 is in a weekly downtrend, I don't want to fight that. I'd much rather, again, this is where people probably gave me shit, or XO, you were bearish or you were defensive at the lows last time. Yeah, I'm happy with that. I don't have an issue with that, because at the end of the day, I wasn't the guy who's dollar cost averaging on the way down. I'd rather be the guy that trades the range, makes a shitload of money or as much money as possible, and then plow that money back into Bitcoin when I believe there's a shift in trend. All right, I could have bought 20% down here, not a problem, but I want to deploy most of my capital when I think, you know what, we've been going sideways for long enough. This to me is a good opportunity to buy the market and look at the trend up. You avoid all that drawdown, all that chop. You can start maybe dollar cost averaging with some ammunition, but the majority of where I want to make my gains is when I believe that we're going to shift structure and into context into an uptrend. And it's the same every time. Bear market stays in a bear market. Look at the compression of the bands. In fact, let me just clear the chart. Look at the compression of the bands here. This is what you want to see on when you're looking for a turnaround in the market. Look at the displacement between the two bands. It's fairly wide, but look how the bands start compressing. That's often your signs that the market is shifting. Same again. Look at the displacement between the bands. This is not where I want to be capturing the market, but once we start seeing displacement and compression of the bands on the 3-day as well, then it's time to think, all right, you know what? That could be a really good opportunity. But the key thing is that most of these bottoms here were structural, and there's two types of market events that you have to be aware of, and that is essentially the first type of market event is this event driven, right? EVENT, or is it structural, which I dread to spell out using this thing, so I'm just going to use this here. Can't even get the tool up. All right, but you get the point. Structural. Okay, I'll just call it S. Structural. Structural is when it's something like government policy, fiscal policy, rates decision, okay? Event-driven is when you have a COVID-like crash like we saw in 2020, because you get a very aggressive buyback of positioning. This was a shakeout positioning followed by aggressive market participants buying back into the market, as opposed to 2022. This is more structural because we had high inflation, we had higher rates, and therefore global liquidity or Bitcoin sensitivity to liquidity was clearly evident, which caused markets to trade lower down gradually, not over 1 or 2 weekly candles, but over sustained month-on-month price action, eventually going lower down, followed by some, liquidation events that we saw in crypto. That's more your structural bottom. So it's a question of now with the geopolitical space, are we going to get an event-driven type of sell-off, event-driven capitulation? Are we going to get some sort of structural capitulation because inflation is going higher, yields are going higher? I don't know. It's a rhetorical question. What are your thoughts? What are you thinking? What do you understand about the markets? Where is the market heading over the next few weeks? That's all I care about. I don't really care about what's going to happen in the next few months. I'm only looking at this at a weekly basis. And when I look at the weekly bands, it's evident to me that there's no real appetite for risk here. And there's certainly possibility that we could get lower prices, which is great for those of us who are prospectively looking to become buyers of Bitcoin. And so that's kind of my thoughts here on Bitcoin. I'm not looking at RSI indicators. I'm not looking at stock RSI right now. I'm just keeping it very, very simple. Like, what are the bands telling me? And the other set of bands that I want to just quickly talk about again, and you can see how I'm shifting away from really not thinking about trading too much to more, all right, where can I buy Bitcoin at value? What's a good level, or what's not only price, but time, and looking at the macro backdrop of Bitcoin. And so there's a couple of levels that I always talk about on whenever we're in bear markets. I always talk about this. I remember doing this in 2020. I remember doing this in 2021, 2022, and it's the same again. When I'm looking at the market here, I'm essentially going to mark out what is the 400 weekly moving average, the 300 weekly moving average, and the 200 weekly moving average. Now, from a color scheme, just ignore what you see here because I've shifted these values to be the 400, the 300, and the 200. The 200 will be in purple, the 300 will be in red, and the 400 will just do this in orange, okay? You can see that. That's the 400, that's the 300, that's the 200. What's the one thing that the market has done every single time that we're in a bear market? At the very least, in fact, there's one more indicator that I would like to add to this, and that's the 50 weekly moving average. I'll do that in blue. Let me just go to my inputs. And this is the 50 weekly moving average. And so I might be repeating myself from what I said in previous streams, but I think it's important that we don't forget these basic concepts. And the basic concept is that every time Bitcoin convincingly loses a 50 weekly moving average, look how quickly we transition towards the 200. Remember, the purple line is the 200. And so if you really want a good indicator of whether Bitcoin is in a bull or bear market, every time that we're trading above the 50, stay risk on. Whenever we trade below the 50, that's, again, I'm not talking about selling Bitcoin below the 50. I'm talking about balancing the act between when you want to be aggressive as a buyer and when you want to be tentative as a buyer or defensive as a buyer. And so when you trade through, you can see how price reacts from the 50 and then it trades through the 50 underside retest. Well, what happens? It's like quicksand. Where do we go? Straight to the 200. That was in 2018. Right? Fast forward to the COVID crash. Where do we pull back into from this rally? We pull back into the 50. We don't trade through it convincingly. We're just trading on the underside of it. But then look what happens. We trade through it on weakness. What do we trade? Not only the 200, but the 300. Fast forward to the 2022 cycle. What happens? Very similar pattern to what we saw in 2018. Notice how price trades through the bands convincingly, rejects from the underside of the 50 weekly moving average, and just like 2018 and every other corrective phase, where do we traverse to? We traverse very quickly, not only to the 200, but even through the 300 in the mid of the 300 and 400. You could call it the 350 weekly moving average at a significant discount. And so when I look at price today, once again, lo and behold, what happens? We trade through the 50. We didn't even attempt to test the 50, which is what I wanted to sell. This was a huge level that I wanted to get aggressively short on, and I didn't even get the trigger or the setup for it. But look at where we are. Look at where the 200 is. The 200 today is at 58. The 300 is at 51, and the 400 is at 40k. Where price goes from here, or where it's going to be in 6 months' time, I'm not too sure. But the one thing I do know is that every time we get a reversion back into these high time frame bands, the 200, the 300, the 350, potentially, who knows, this cycle we might trade into the 400. I think that's a point where I become very interested as a buyer. And then we'll just have to see what the overall structure of price is. Certainly not a time to be bearish, but certainly a time where you think, you know what, we've had a 60-70% correction on Bitcoin. What's the overall macro landscape looking like? What's the geopolitical space looking like? Are we seeing talks of a recession coming to the media? Because when that happens, it's generally a good time to start adding to your portfolio because markets are forward looking. And so if the general consensus is risk recession, then great. I don't want to get kind of caught up in that whole discussion about, oh, you know, we're heading to recession like I did in 2022 or 23, because it can kind of influence your bias. So lessons learned is that when Bitcoin's at value, I certainly want to be adding to my portfolio. And then when Bitcoin turns positive on the higher time frame, which is the weekly bands, I certainly want to increase the probability that I want to ride the momentum up because I'm getting confirmation of that inflection point. Just like here, you could have bought on that 8,000, 9,000, straight to 65s. You could have bought at 22, 23, 24, maybe even at 26s, 27, 30s. Where are you going? Straight to 100. So once again, you know, even prior cycles to that, look at this. You could have been buying from a correction of 1,100 all the way down to 200. Where are you selling? You're selling for a multiplier of you're buying at 200, you're selling at 20,000. So, you know, historically, the bands have generally done a good job. And I think that will probably be the case moving forward, whereby I'm not just going to rely on the bands, but it gives me a measure of, you know, to some extent, the risk profile, or, you know, I want to see strength in the market, and I'm not seeing any strength in the market. And I'm not talking about short-term trading opportunities where in 2 months' time, we might trade 80 to 85K. That's fine as a trader. I'll happily trade that. I'm talking about as a long-term buyer. You know, I want to buy Bitcoin, send it to my cold storage, and lock it up until I believe the cycle highs are in again. And that's all there is to it, really, from a long-term high time frame view. Now, on a short-term basis, let's talk about actual trading ranges now on the short-term basis. If I was to hazard a guess where price is going, I would say, you know what, we can't even get to February's high. Maybe we're probably going to take out February's low next. But either way, it doesn't really matter what I think. It's up to the market to show me what the market wants to do and how I can position for that. When I go back to a range chart like this here, you'll see a clear pattern that we make a higher high and we shift all the way back to the range lows. We make a higher high. I think there's a very good case that we could trade back towards the range low. And this is very typical of a bear market, well, or the characteristics of weakness. I don't like to use the word bear market because let's just say Bitcoin drops 25-30% lower down into 40k. Would you still consider that a bear market? I don't. I consider that a time to really pay attention to what could be the transitioning period into a bull market. You know, just how up at 125s, everybody deemed this to be a bull market. I didn't talk about the fact that, oh, the market's really bullish up at 125s. I was evidently clear that I think we could be in for some risk to the downside. I certainly didn't use the vocabulary of bull market, bear market. All I said was I think there's some risk to the downside. And equally, when price comes lower down, all I'm going to say is I think there's some risk, a chance to get some risk onto the upside. Okay, it's not about I'm bearish or bullish. I'm marrying that bias. As a trader, I want to be fluid. I want to be flexible. It doesn't really matter about the bearish or bullish aspects of price. I'm just thinking about what's a good trading opportunity for me to make some money, that when I profit from trading Bitcoin, it gives me an opportunity to buy back into Bitcoin. And the other thing that I want to make clear is that I think with my strategy going forward, when I've been shorting Bitcoin for the last 12 months, last 6 months or 12 months, whatever short trades I take, I'm not shorting the market because, I want to make some money and cash it out. I'm actually shorting the market because that's going to go back into buying more Bitcoin at value and risk off. And I want to take advantage of the fact that, well, you know what, I can increase my cash holdings by shorting the market. And therefore, when I do believe that Bitcoin is at a bottom, whether it's here or whether it's lower down, who knows? But those short profits, I'm just going to be throwing it back into Bitcoin because I don't believe in putting in more of my own capital from wherever external sources. I'm just trying to leverage my skill as a trader to take advantage of trading the market in both directions whilst we're in this horrific downtrend, to think, I'm happy to take some longs, I'm happy to take some shorts, but the overall context is to the downside. So the higher probability trade for me is to the short side until I believe that we've stretched away from what is perceived value. What is perceived value for me? Well, the only time I'm really going to be thinking about long in Bitcoin is when, right? Here's an example of when I would. When you see something like this, look at where the bands are and look at where price is. That is quite a standard deviation, a few standard deviation moves away from the band. That's where your mean reversions should really be taking place. Okay? And so as a buyer, this is more attractive to me, unless, as a trader who wants to long the market, this is more attractive to me that, all right, I think we've seen extreme capitulation for this move down. We're quite a significant way from the bands. Maybe we can get a mean reversion back up, That's kind of how I view markets. So if there is another push lower down and we are considerably away from the bands, and if that's February's low, then great. I'll probably look to take on the trade if I see a trigger for taking on the trade. Right now, as it stands, I don't see any reason to get into that long position. Now, talking about high time frame ranges here. Where's the mid-level? Where's the macro mid-level on this chart? It's here. Where's the previous range of 2024 that we traded in a range for 9 months? That's your range highs, okay? From 2024, let's just do this in green. And that's my range lows here. As far as I'm concerned, we can throw in a mid-level, give or take. We can throw in a mid-level, right? That, in essence, is the range that I'm looking to trade. If you want to keep it really simple, as a trader, range high, range low, as a reference point. With my mid-range. Where's my mid-range? It's coming in at February's low. Where's resistance? Where's the key resistance? Where's the level that I wanted to short? It's at February's high. This level here is February's high. Now, this is purely to do with trading. Like I said, it's not so much, I want to buy spot Bitcoin. It's where I want to trade. February's low, confluent with the mid-level. Range high, confluent with the February's high. You show me the extremes of price movement below here with acceptance, or at least I'm hoping for acceptance back inside of the range, or you show me a move up to the highs, okay, of February's high. If we can't take the lows first and we go back up to the highs, that's a higher probability short. If we take out the lows, then push to the highs, I'd need to see clear signs of rejection. But at the end of the day, when it comes to order flow, and I think this is going to be a great topic, I probably will be on stream later this week again, or towards the end of the week. Or certainly I'll probably come back on stream, on a public stream, when I feel prices are now worth considering trading and I'll explain what I'm looking for from an order flow perspective with an example of a previous pattern of what I'm looking for from an order flow perspective. But certainly these are the two zones that I'm really thinking about trading. Everything else has been very, very short term, where I've just left it alone, because as I've advocated in the past, that when I look at Bitcoin price action, it really does remind me of this area here where we've got capitulation selling. What does price do? Again, when you want to trade Bitcoin, you really want to be looking at the extremes. So again, when you look at this sell-off here, let's go through this as a case study of price action. When you look at Bitcoin here on a price perspective, this was the capitulation low, right? Back in May 2021. What was the reaction that we had from this low? It was a rally to the highs of May 2021. So you can certainly say that this was the reactionary high, and that was a reactionary low. Now, when you go to the daily chart, okay, look at the price action within here. It's really fucking difficult to kind of swing trade this environment. But where are your cleanest trades? Your cleanest of trades are going to be at these key inflection points, at the range high, at the range low, again at the range low, back to the mids. Really clean price action when you have a good enough strategy for trading the range without over trading. You're looking for one or two high quality trades, and you're willing to wait for weeks. Okay, that's all I've done on Bitcoin. I've waited weeks and weeks and weeks for anything really considerable. I've only had the one trade last week, and prior to that I took no trades in March. And so what I'm trying to say is that you could have easily been longing this, aiming for these highs or these highs here, right? But it never came, because you just got cut out. You got stopped out. And then you try again. You might think, all right, we'll reclaim the mid, I'm going to trade this, stop below. Well, guess what? You just got stopped out. But whereas you look at the reaction from the range high, equal into here, and you look at the reaction from the range low into the mid, high probability trades, high probability trades. Same again. Just take that from A to B. That's a good enough strategy. What's going to define you, though, is knowing when to execute at these inflection points, okay? Here. Why are you taking the trade here? All right. Classic crypto trader, classic trader Exo will say to you, hey guys, you know what? I'm a range trader. Well, wait for price to show you the deviation, then look for the trigger inside the range. I think that's a shit strategy, if I'm honest with you. That's a strategy that I probably would have talked about on stream in 2020, 2021. I don't trade that way anymore. In fact, where I trade is on the extreme, on this here, where people will tell you, oh, that's a deviation, wait, or potential deviation. You want to wait for it to find acceptance back inside the range. I'll say it out loud, as somebody who's traded that system, who's traded that pattern, I think it's bullshit. I think it's just a really shit tier way of trading compared to how I trade now. And that you can really get very tight if you can read what's happening on the order flow, on the footprints, on the market profile, on the delta, on the relative volume, and maybe on the DOM and the ladder. You can really see whether this level is going to hold or not, or whether you can see whether this is all driven by forced selling, not just shorts opening, but anybody who's got their stop under here or wherever the stop is. If they've taken a long position from I don't know, God knows what, let's just say they've taken a long position here, because this is such a classic retail thing to do, oh, let me just place my stop under there. Well, when their stops get triggered, what are they effectively doing? They are now selling their position to close out any longs that they had. And then the fact that you're going to have breakout traders piling in here, heavy selling delta, well, guess what? They're trapped. And that's why you get those mean reversions back inside the range. All right, and it's the same up at the highs. Breakout traders piling in. How many times do you see in crypto Twitter, oh, look, as long as Bitcoin is above this level here, this, fuck bears, come on bulls. But what happens? It's just, there's no buyers there. They're slamming into aggressive resting limit bids, who are absorbing all that price action. If you can identify that then increases your probability of thinking, I think this could be a fake break, and I think we're going to get a mean reversion back inside the range, and I'm looking to take it to the other side. That's how you can increase the probability of execution. So we will cover some examples of execution with order flow over the next few streams. But look, the story that I wanted to basically the point that I'm trying to make here is that this price action here is no different to the current environment that we're in. Suppressed volatility, very choppy environment. You can't tell whether it's going to go higher or lower, but the way to trade it is just to wait for the extremes. If you really want to take those high probability trades with a level of patience, then this is how I'm going to do it. I don't care if it's just one or two trades. Like I said, in 2025 Q4, I took 120 trades. Why? Because the volatility was there. This is not the environment where I have an edge. As a scalper, great, good luck to you. I'm not a scalper. I'm just an intraday or intra-week trader. I'm not a scalper. I'm not a 5-minute trader. And I think even if I was, it wouldn't suit my personality or style. I'm not somebody who comes to the desk and looks for a trade a day. I'm somebody who's far more content with waiting for those bigger rotations, bigger inflection points, and really sizing up on those and adding dynamically to the trade to increase my position sizing whilst allowing my risk to remain static at 0.5 to 1%. People always say to me, so how am I supposed to grow my account with 1% risk? When you say that, just think about what you're saying. You're basically saying to me, I don't understand position sizing. Because you can put on some serious size and stay at 1% risk. You can add to a winning trade and keep your risk at 1% and really double your size. Figure that out. If you don't know what that means, then you've got some homework to do. What does that mean when XO says, look, you can add, you could take an entry, and then as price is moving in your target, you can double your size, yet your risk remains static at 1%. That's called dynamic position sizing. And if the trade starts going against you, you can start scaling out of it. You've got to be fluid in your trading. There is no such... I really don't subscribe to this philosophy, look, here's my entry, there's my stop, and that's it. Well, if I know there's a good chance that price is going to go to the mid-level, right, and I've executed an entry here, why the fuck am I just going to sit there, watch it go there when I think it's got a very good chance? Once price is moving up higher, I'm going to fucking add size here and move my stop slightly higher up. Because I really want to double down and believe that, all right, get above this level, get above the range quarter, I really want to go for the jugular and add to my size. And trust me, when you start adding to your winning trades, it's not easy. That's when you can really enhance yourself as a trader. Because what does human nature do when they're in a losing position? Let me just double down on my losing position and I can dollar cost average and make my entry slightly better. Yet you're offside by 3, 4, 5%. And then before you know, you've just taken a big loss at 20%. Shift that mindset into a winning strategy. Like, all right, once I'm in a winning position and I think I've really got the market where I think I know there's a good chance it's going to head higher, double down on your size and adjust your stops. Okay, keep your risk at 1% because those big winners will compound over time. But yet people, what do they prefer to do when they're in the long and it's going against it? Let me add a bit more. Let me add a bit more. Oh shit, I didn't have a stop and I've just pissed away 20% of my account. But you won't do that when the trade is in your favor. It takes a bit of practice. In fact, it takes quite a lot of practice, but it certainly shifts the mindset. And you're doing what the majority aren't doing when it comes to trading. And that's why, the book that I talk about, Best Loser Wins by Tom Hugard, he always advocates that normal thinking doesn't win in this game. So you've really got to question your personality, the fact that do you even have a strategy? Do you have statistics to prove that you're a profitable trader? Do you have statistics to show that you know exactly what you're doing when it comes to trade execution? How many of you can actually talk to your trader friends and say, I know exactly what my execution is when it comes to trading. I know exactly what I'm looking for when I execute a trade, as opposed to, look, here's an order block, and yeah, if price trades this order block here, just I don't know, just fucking short it. Is that it? There's more to trading than order blocks. Let me just sell this here. And what if it pisses through and goes all the way through that level? Then what? Can you explain why it went through that level? And do you understand the market dynamics of microstructure? Why this was a bad trade? Why you shouldn't really been thinking about shorting this level just because of an order block there? An order block is just randomness. Okay, it's an area where you identify supply or demand. But really what you have to understand is what is the market actually doing in terms of the auction process at this level? What are buyers and sellers actually doing on the microstructure level? That's what's going to give you an edge in markets. And your biggest edge is execution. Because your timing, whether you enter here or whether you enter here is going to define your risk profile if your stop is up here. Okay, that's the difference between there's your risk profile or there's your risk profile because you waited for the deviation to get in. That's your risk profile there versus there, and therefore you've just, from here you're churning out a 1 hour trade, from here you're churning out a 3 hour trade. So these fine margins do matter, and you've got to have not only a trading strategy but an execution strategy as well. But probably went off tangent. I could talk all day about trading. It's what I love. But at the end of the day, the point I was trying to make is that you've got beautiful price action within these range extremes. This is something that, again, I wouldn't take blindly. Oh, look, deviation. No, I would not take this blindly. Maybe back in 2022, this would have been a classical trade that I would have taken. But now I wouldn't unless I know what's happening at this level. And look at that. Price, aggressive sellers coming in. What does the market do? The minute you get above there, well, they're puking offside. They become force buyers. Now, guess what? When people see this, what's your natural inclination? Oh, look, this is bullish. We've just broken out of the range. This is going higher now. I've got to get on board. Everybody's talking about price going to, back up to 50K. Hang on a minute. Why don't you go to the weekly chart? What are we doing here? Oh, look. Maybe it is bullish because the bands are flipped bullish now in this instance, right? So you got to look at the context of price. The daily bands are bullish. The 3-day band has turned bullish. The weekly bands are bullish. Any pullback now, you can get in on the trade and look for continuation higher. All right. Test the range highs. Perfect retest. Continuation higher. Again, when you look at the 3-day, really nice pullback into the bands, very short-lived price action under the bands. Notice that we didn't push away from the bands, but we traded under them. The minute you go back above, that is a cue that you're going to go higher, okay? When you see this, when the bands are bullish and you get a dip under the bands on the 3-day or the daily, and we reclaim the bands, that's an indication that we're ready to go higher, okay? Or the inverse of that is when we're going to go lower down. And so when I look at price action in terms of where we are today, that's the point of this discussion here is structure. It does remind me of this environment. So you just got to be really patient and trade those edge zones until there's an opportunity to think about trading this market. All right. Let's have a look at some of the other indicators. Let's go to the stock RSI. I mean, what can I gauge from this? It tells me that the 3-day has topped out, confluent with the bands. Okay, this is not something that I want to fade. What does the weekly tell me? The weekly has still heavily bottomed out here, but this can remain oversold whilst we're in a downtrend. Okay, just how it can remain overbought at the highs whilst we're in an uptrend. What does the daily show me? The daily is showing me that price has potentially weakened in momentum and there's room to go to the downside as well here. Let's look at the, not a big fan of the RSI, probably on the rare occasion that I use the RSI. But again, when you look at this, people talk about the daily being oversold. Yes, it was, but now it's not. The weekly, you could argue, was oversold, but it bounced. And what is this now? Is this oversold? But here's an example why when the RSI can remain oversold, and this was between May 2022 all the way through to December 2022. That's 7 months of, oh, look, we were oversold. Now we're not. We're just going sideways. And yet price is going lower down. Okay, you could argue there's a really big RSI divergence there. But for how long? Is it a few weeks? Is it a few months? It's a bit difficult to really gauge. But you can think about, all right, maybe this is weakness where I can start positioning or thinking about this could be an inflection point in the market. Fair enough. When I see that here again, it's like, all right, the RSI is sold off, oversold here. But if you look at this, where price was at, these levels here of around about 25, 20K, down to 15. I don't know what's going to happen. Are we going to drift lower down before we get a really big reaction whilst we get a bullish RSI divergence and prices going lower down? Then fine. You give me February's low, or you give me the lows of like 49, 50k, or maybe 45k. I don't know where the low is, but that's certainly where it becomes really interesting as a prospective trader and potentially somebody who's looking to pick up some spot Bitcoin over the coming months, or in Q2 or Q3 or Q4, whenever I think the opportunity makes sense. It shouldn't really matter too much what I think when I'm going to buy Bitcoin. It's all about you. When do you think you want to buy Bitcoin, and what are the reasons that you want to buy Bitcoin? Maybe you've got a different strategy where you're happy to keep, every week you're happy to keep pouring in whatever percentage amount just to keep buying Bitcoin even when it's coming all the way down. That's absolutely fine. Whatever makes you happy. Are you entertaining the possibility of long in the market if you see acceptance above the 80k level? That's a good question, and I can't answer that question because it really depends on context, unfortunately. It depends on how we get to 80k. If we trade 80k, where did we come from? That's what I need to know. And if I don't have the answer to that question, then I can't tell you what I'm going to do at 80k. So it's a question that I could have answered 4 or 5 years ago, and it would have been a random answer. It probably would have been an answer based on bias. But if I'm being objective, the first thing that I look at is, well, where has price come from? If we're going to trade 80k, right? Are we trading 80k, which is this level here, from, let's just say we turn around from here and this is a higher low, and then we go to 80k, then yes, I would probably short this, because I think, all right, all these here probably gonna, if this is short-lived, and if I'm shorting this and I get acceptance back inside it, I'll add more size, because then I think, all right, you know what, we're probably gonna come back down and trade into the February's lows. We've taken out February's highs. But if we do something like this, right, where price takes out February's low and then it goes into 45k region, big deviation, comes back above and comes back up to 80k, what are you lot going to say to me? Or you can say, oh, Exo, you said you were going to short 80k. We're at 80k now, 6 months later. Why are you not shorting the level? You were bearish at 80k and price goes higher. Well, it's a completely different context now. That's why I'm not going to short the level. So it really depends on the context, right? Because I know what retards are like. Retards are like, yeah, look, Exo said 6 months ago he's going to short 80k and we're at 80k and we're at 90k now. He got blown the fuck out. That's what people do. It's stupidity. And so really what I would say is, well, objectively, if the market pushes higher into 80k and I see weakness and I see absorption of aggressive buying, yes, I'm absolutely going to sell that, and I'll double down on that position and move my risk into here, where I'm really looking to size down into this trade. But if we get something like this over the next 4 months, probably not, because I think there's a good chance that we could get an aggressive rally even higher into 95, 96 before we might even get a bigger leg down. I don't know. I'm not even going to think about this or this. Let's just focus on February's high and February's low. I don't know what's going to happen after that. I don't know what's going to happen before that. That's all I can say, is that these are the zones that I'm looking at. Let me be objective. I'm not here with a crystal ball. I don't have a paid course to sell. I haven't got bullish or bearish fucking hopium to sell anybody. I'm just here to trade the markets for what they're worth, and that's about as real as I can be. Let's have a look at some market profile charts very, very quickly. In fact, let's look at Ethereum. What's that thing doing? That doesn't look great, does it? I wanted to sell 2500s. I didn't even get an opportunity to sell Ethereum either, but for me it was a classic range trade setup. I would have loved to have sold 25, but it wasn't to be the case. You can see where I was marking out from a private stream that I did, that if Ethereum pushes up into a 1, 2, 3 drive, then I'm looking to sell back into range lows. The market's just been so disappointingly weak that I didn't even get that set up, in all honesty. I mean, do I think Ethereum could go higher in the next cycle? I actually do, yeah. I do think Ethereum could go higher. Despite what many people think about Ethereum, I think if I'm looking at this as a range perspective, and when I really think about macro accumulation, right? Look, if we go into the perception that equities and look, first question is, do you think in the next 5 to 7 years equities and Nasdaq is likely to go higher, right? And if the answer is yes, do you think Bitcoin is likely to go higher? The answer is probably yes, right? Therefore, we know that Ethereum often moves late in the cycle, doesn't it? So what's to say that we can't use a range projection just like I did on Bitcoin at 58, 60,000 in the summer of 2024, and it went to 120, 125. Why can't I do the same here with Ethereum? That maybe all of this price action that we see on Ethereum here, right? Maybe all of this is just one big accumulation range. And that if this is all one big accumulation range, how am I looking to trade Ethereum? Well, I'm actually looking at it from this perspective. As somebody who actually sold this, and I've got proof on the timeline of me shorting this level, having longed into this, that I sold the level on Ethereum, right? Back in August, openly sold it, openly said I'm going to trade it for a mean reversion. And then in further subsequent streams, what did I allude to? Well, look at this. If you look at Ethereum, look at what happened in the previous market cycle. Look at where we sold off from and look at where we ended up, right? That's where we sold off from. In one leg, this is where we ended up. Well, look at that. This is where we sold off from. And in one leg, we ended up here, consolidation, before we got a leg lower down. So it's no surprise to me that this ended up here. I was just actually surprised by how weak the reaction was, because I thought that we probably were going to get a sell-off and get some violent bounce before the next leg down. In this instance, it's been a sell-off, consolidation, followed by another sell-off, which is indication as to how weak price has been and how weak demand has been. But let's go back to what I was saying. I don't know where the low on Ethereum is, but let's just go for the worst case scenario. You know this saying, prepare for the worst and hope for the best? Well, look. If Bitcoin drops by another 10, 15, 20K, then don't you think there's every possibility that Ethereum could potentially trade back into the lows of $1,000? And if it does, I think it becomes an attractive buy. I really do. You give me something like this or a base, and it goes sideways just like it did here with the bands, right? Look at the bands. The bands aren't even bullish. But you start going sideways and you start retesting the bands and you compress in a range band, then these lows, or certainly the tail side of the low, you're not trying to nail the bottom, but you're trying to play the probability that actually this looks really exhaustive from a selling point, that sellers can't seem to push the market any lower down, that this the 25th percentile of a macro range low looks really attractive. What is the 25? Well, that's the 50th percentile. That's 25%. That's 75%. The 20th percent is all this here. If that becomes attractive, then I'm looking to buy Ethereum at that 1,000, 1,100, 1,200 level on the tail side. And guess what? For me, back to the mid, back to the highs. We might reject, breakout. There's your breakout to 6, 7, 8,000 in a future cycle. And I don't think it's, we might look at Ethereum and think that's never going to happen, but of course it can happen. When you just zoom out enough of the chart and you just think about the bigger picture, what does this look like to me? If it holds structure, this to me just looks like consolidation in one big range. And it's a fairly big range where you can make some good money. If you play these high time frame cycles, what if we just compress and compress over the next 3-4 years? Okay, get another push, get a shallow rally, and then a break. If you go to BNB, look what BNB did for several years, right? In this range here, let's just ignore this. You look at what BNB did from 2021 all the way through. I mean, the fundamentals are slightly different on BNB, and we kind of know that CZ and Co. and Binance probably control more of the supply. But again, you look at the range that's developed on BNB. It couldn't make new all-time highs on the first attempt. It couldn't do it on the second attempt. It couldn't even do it on the third attempt. Where did we get a pullback to? We got a pullback to the mid-range, right? The mid of this macro range. And then it does it on the fourth attempt. And you think, oh, fuck, this is really shit because we just had 1, 2, 3, 4 attempts and it's broken back inside. Well, that's 2021 May. This is 2025. 4 years of sideways price action. Now look at it go. When it breaks out, in fact, let me just pause it. If you just do a range extension, there's my range low, there's my range high. If I just take a range extension of that, let's just say, give or take, round about there. 1 to 1. Okay, let me just get rid of this local mid-range. I use my range projections as a target. That's what I do. This now becomes my mid-level. That becomes my range high. Let's move it forward. There you go. We've hit target. Get out of the market here. You can't time the top. Get out on the reclaim of this range high. Back down again. Straight to the mid. Mean reversion. All right. So why can't we do that with Ethereum? Is my question. It might take 4 or 5 years, but why can't we do that with Ethereum? Okay, that's the one question I ask. And then when I look at Hype is probably my favorite alt that I want to keep picking up exposure to. I don't know where the low. Again, I don't know where the lows are going to be, but when I look at this current price action here, this to me is all one big range. We've just traded the lows, aggressive sell-off. We've just traded the highs. Okay, and when you look at the bigger picture, for me, this again, there's a high. There's a breaking structure, there's a lower high, there's an equal low, there's a lower high again. I think we're going to get a mean reversion back into the mid. If we slide through the mid, I think we go lower down towards the range lows, and then we'll see what happens. All right, I'm not going to get ahead of myself and say, oh, look, I think Hype is going to come to $10. I'm not going to say, oh, look, it's going to go $50. It's in a range. If it trades in a range, looks like a range, then it probably is a range, and I'm just going to take it from one level to the next, okay? Simple as it is. If you don't like that, tough shit. I'm not here with a crystal ball. I can't tell you what's going to happen. All right, I think that's it for today's stream. I think on the next stream, what we'll do is probably in 7 days' time, I'm going to talk about order flow, market profile, and looking at the DOM and the ladder. So maybe next weekend, if nothing exciting happens this week, then I'll certainly shift it to next weekend. But if anything sets up that I like over Wednesday, Thursday, well, you know what, it's month end, isn't it, this week? So it's the 22nd, next weekend is the 30th. So maybe I'll probably stream next weekend, heading into April. We'll wrap up Q1, and I certainly think if there's an uptick in volatility, then I'm going to certainly be looking to increase the number of trades that I take. Just to give you a quick overview for those of you who haven't fallen asleep and are still here, here is an example of, yeah, this is my latest equity curve. When you look at this, what do you understand when you look at this? Do you see, and I started this I actually started this in October. This is the 21st of September. This is the present day. What do you notice? That I was taking a lot of trades during this period, okay? Notice how controlled my drawdown was. Okay, I'm taking small scratches. This was a fairly significant drawdown for me, and this is the one time that I got on the wrong side of a long. This was around about, 2.5–3% drawdown. But since December, all right, December kind of kicked in here. Look how actively I've traded this. This was over 120 trades. And the rest over the last 3–4 months, it's been 10 trades. Just sideways. A lot of sideways means I've been inactive, winning trade. Sideways, take a trade, small loss. Sideways, win. Sideways, small loss. Sideways, decent win, okay? Sideways, another win. Positive equity growth, but really picking my trades. And look how controlled the drawdown has been. So, this is what a P&L curve looks like when you're not really trading very actively versus something like this where the drawdown is controlled, but the aggression is there and the acceleration is there because of obviously being trading for long. But so far, 6 months since I started this account, positive equity. The one thing I'm really pleased with, I've not had anything greater than a 3% drawdown. So good control is really what is this key to trading markets successfully. And that's one thing I always advocate. If you want to do well in markets, you've got to be an exceptional risk manager. Forget trying to hit home runs. Maybe just try to survive big hits first, and then think about compounding into trades once you've got your drawdown and risk management under control. All right, I think have a really great week ahead. Have a blessed week ahead, and it's a real pleasure and honor to do these streams for free. Like I said, I don't have a paid group, but I'm running a group in partnership with Prime. So if you want to join, you're more than welcome to join. It starts in April, and we will be ending that at the end of June. For those of you who are still in the Substack, nothing happens with your membership. You all will have access to the content that I publish over the next 3 months. And like I said, starting from April, I will be streaming on the private streams twice a week, and I will be actively looking at trading setups, and not just Bitcoin, but equities indices. When I look at the equities market, I shouldn't say this out too loud, but I think there's going to be some really good shorting opportunities here. When I look at Tesla, when you look at the top tier, the highs, I think that any rallies are probably for shorting. When you look at Microsoft, you know, it's still continuation of low down prices. We are turning over. The trend is to the downside. Equities and NASDAQ is rolling over. Maybe we'll look at Google as well. But all these to me indicate that these are distributive. But the exciting part isn't so much, oh, look, you know, I'm trying to short the market. The actual exciting part for me is that from an equity perspective, I'm looking for fucking value here. If Microsoft can come all the way back into, I don't know, maybe 231, where it was at the lows of 2022, it could happen, right? Maybe it doesn't. Maybe it stops at 300. And maybe that is the bottom of the market. You know, we looked at the chart that Miad shared, was the equities breadth indicator. Well, that's going to be certainly playing a role. But I think what really is compelling here is that for the first time on the monthly chart, we've significantly broken below the bands. The only time we've ever done that on the monthly chart in the past was when in the 2008, 2009 recession, right? So I'm really excited. You know, despite the fact that there's a lot of pessimism around, I'm super optimistic that as a buyer, as somebody who wants exposure to equities, the lower some of this stuff comes, the greater the perceived value of what is going to be an exceptional buy, something that you can hold on to for the next 2, 3, 4 years. So that's what I'm waiting for, really, more than anything. If it happens, great. If it doesn't, fine, I'll pick up some exposure elsewhere or partial exposure. But for those big capitulation events, then I really do think there's going to be some exciting opportunities in the weeks ahead. For as long as this downtrend continues, just like it did here, and just like it did here, and once again, we're in a downtrend period. When you look at previous cycles, again, it doesn't, you know, I think I shared a tweet a month or two ago that the average bear market lasts anywhere between 9 to 15, 16 months. Average, okay? Not what is the least number of months for a bear market and what's the most number of months. Just the average, anywhere between 9 to 15 months. Well, this has been rolling over since October, so who knows, right? We could have a fairly doomish outlook for the rest of the year, but I think as a trader, there's plenty of opportunities. But as an investor, further down the line, brilliant if you're looking to buy into the markets. Okay, so all in all, very positive from me. I really welcome lower prices as a buyer, as somebody who wants exposure to the markets. These are gifts that you get given in the market every so often, and you've just got to have the balls and the courage to step up and buy whatever it is you want, whether it's equities, whether it's, you know, stocks or Bitcoin, Ethereum, whatever it is. And I think for me, it's going to be all about Bitcoin and equities. They're the two main assets that I want to get exposure to from a portfolio perspective. But apart from that, like I said, we'll talk about that on a weekly basis or a bi-weekly basis. And I wish you a great week ahead. Take care, guys. God bless. Speak soon.